Ladies and gentlemen, good day and welcome to GREENLAM Industries Limited Q4 FY22 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of the call. The statements are not the guarantees of future performance and involve risk and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Saurabh Mittal, Managing Director and Chief Executive Officer, GREENLAM Industries Limited. Thank you, and over to you, Mr. Mittal.
Thank you, Diksha. Good afternoon, friends, and welcome to the call. I'm joined by Ashoka, CFO, Samarth, and by the SGA team, our relationship advisors. So on the results, I'll give you a brief about the quarter and the year, and an update about the new projects, and Ashok will take you through the exact maths and the data. So Q4 for us overall we think went quite well, and this was despite the challenges at the Behror plant in the month of Jan and few days of February, where we nearly lost about 20-25 crores worth of sales. We also had experienced certain unexpected cost increases, in the month of February, for which we've undertaken price hikes again in the market, which have been partially and will be implemented in Q1 of FY23. In the last quarter, in Q4, we also had higher finished goods inventory at the plant and at the ports due to unavailability of containers and delays in vessels, which have actually dampened the revenue growth and is showing up on our inventory. But despite all the challenges, I think we put up a good performance from the company side. If you look at the financial year 22, revenues went up by about 42%, slightly above 1,700 crores. And this was again despite the two COVIDs, Behror plant being under restricted production, where we lost nearly approximately anything between 80 to 100 crores of sales. The laminates industry and our company in particular, in the entire wood panel segment, had one of the hardest year last year in terms of significant RM cost increase across raw materials in the laminates and the wood and allied segment, as nearly 80% of our raw materials are imported or pegged to imports. We have significant amount of containers moving into the plants, and we also have 50% revenues coming from exports, where too we face challenges of supply chain, freight increases, availability of vessels. But despite, I think, all the challenges the industry faced, we probably ended up gaining market share as the laminates business grew nearly 46%. And I think we added nearly about 500 crores of revenue in the laminates business. The cash flow management also was quite good considering the challenges the industry faced. We were able to reduce debtors value, debtors days. Inventories were on a higher side because RM costs went up. Lead times of decorative paper went up from like 3-4 months to 9-10 months. So really the whole inventory management kind of was challenged in our company. But I think despite all those challenges, I think the cash flow management was quite superior, and we've been always focused on the cash flow. So I think that's where we stand on that front. On the flooring and door business, although revenues went up by about 12 to 15%, although on a smaller base, but we managed to reduce capital employment in that business. Capital employment reduced by about 25 odd crores or 15% of the total capital employed. We continue to work towards building the floor and the door business. The flooring business also, we were able to add new products to the range. We've also significantly improved the value mix and price realization in the floor business, and we are hopeful that things will get better in this financial year. On the two new projects in Tamil Nadu and Andhra Pradesh, things are on schedule as we talk. Civil construction has begun at the laminates plant in Andhra Pradesh and the plywood factory in Tamil Nadu. All major equipments of laminates particle boards, and ply have been finalized, and orders have been placed to the vendors. Regarding the funding of the two projects, with the investments already done and the cash flows of the company, for FY23-24, the cash we're sitting on, and with debt, we are good for these two projects, and so really I think that seems to be under control. As far as FY23 is concerned, we believe that the shift from unorganized to organized, will continue in our industry, and we stand to benefit with that shift. And even in the exports business, we think we'll end up gaining more market share. Although we have challenges on capacity, so till the new capacity comes up, there's only so much we can produce and sell. But till such time, if there are no more disruptions this year in terms of COVID or etc., we clearly believe revenues, margins will all be superior this year versus what we did in last financial year. So otherwise, things on ground, as far as we are concerned, looks pretty okay with us. The demand side looks good. Opportunity for us to gain more market share is clearly visible, and we are continuing on our growth path in FY23 too. So that's it from my side at the moment. Ashok will take you through numbers, and then if you have any questions, queries, I'll be happy to talk to you again. Ashok, over to you.
Thank you, sir. Let me take you through the financial performance. For consolidated net revenue for the quarter, grew by 11.6% on YOY basis and grew by 3% on sequential basis. It stood at 463 crore as against 415 crore previous year. Gross margin was down by 380 basis points to 44.9% in Q4 from 48.7% in Q4 last year. On a sequential basis, gross margin was up by 60 basis points. Gross margin in absolute terms grew by 2.7% to 208 crore in Q4 as compared to 202 crore in Q4 last year. EBITDA margin was down by 540 basis points at 10.7% in Q4 as compared to 16.1% in Q4 FY21. On a sequential basis, EBITDA margin was down by 120 basis points. EBITDA in absolute terms degrew by 26% to 49.6 crore in Q4 as compared to 67 crore last year. Net profit for the quarter stood at 25.7 crore as against 30.9 crore Q4 previous year. For a year as a whole, consolidated net revenue grew by 42% and stood at 1703 crore as against 1200 crore last year. Gross margin was down by 520 basis points to 44.6% in this year as compared to 49.8% last year. This is primarily due to rising raw material costs and logistics challenges which we have. Gross margin in absolute terms grew by 26.9% to 759 crore this year as compared to 598 crore last year. EBITDA margin was down by 340 basis points to 11% as compared to 40.4% last year. EBITDA in absolute terms grew by 7.9% to 187 crore in comparison to 173 crore last year. Net profit this year grew by 23% to 90.6 crore as compared to 73.7 crore last year. Moving on to segmental performance, laminate and allied segment revenue grew by 15.9% this quarter on YOY basis, and it grew by 3.9% on sequential basis to 424 crore from 365 crore in Q4 FY20. Volume degrowth stood at 11.5% this quarter. Domestic laminate revenue grew by 23.9% on YOY basis and grew by 4.1% on sequential basis. Volume degrowth stood at 4.5% on YOY basis. International laminate revenue grew by 9% on year-on-year basis and grew by 3.6% on sequential basis in value terms. However, in volume terms, it is degrown by 18.5%. EBITDA margin stood at 12.9%, a degrowth of 500 basis points on year-on-year basis and a degrowth of 40 basis points on quarter-on-quarter. Production volume were at 4.14 million sheets at a utilization level of 106%. This is despite of temporary restriction at one of our plants in January. Sales volume for the quarter stood at 4 million sheets. It is lower than the production volume because of logistic side challenges, which is there on a continuous basis. Our average realization for the quarter was at 1,012 per sheet. For the year as a whole, laminate revenue grew by 46% to 1,556 crore as compared to 1,065 crore last year. Volume growth stood at 23%. Domestic laminate revenue grew by 56% in value terms and volume growth stood at 33%. International laminate revenue grew by 38% in value terms and 13.9% in volume terms. EBITDA margin stood at 12.7%, a degrowth of 400 basis points on year-on-year basis. Production volume were at the highest level, 16.77 million sheets this year and at a utilization level of 107%. Sales volume for FY22 stood at 16.53 million sheets and average realization for this year was 901 per sheet. Moving on to another segment, veneer and allied segment. This consists of decorative wood veneer, engineered floors and engineered doors. Revenue for the entire segment degrew by 20.6% on year-on-year basis and degrew by 5.2% on sequential basis this quarter to 39.5 crore. Revenue for the for this segment grew by 9.5% this year to 147 crore. EBITDA for the segment was at 3.76 crore. EBITDA loss for this segment was 3.6 crore in this quarter, as against a profit of 1.5 crore Q4 last year. For the full year, EBITDA loss stood at 9 crore as against a loss of 4.86 crore last year. In this decorative veneer segment, there are three segments: decorative veneer segment, engineered floor and engineered door. In the decorative veneer, the business grew by 6.5% to 83.7 crore as against 100 in this year. Sales volume for quarter 4 stood at 0.29 million sheets and for the year stood at 1.09 million square meter. Capacity utilization for this quarter was 28% and for the year as a whole was 26%. Average realization for this quarter was 750 per square meter and for the year as a whole 764 per square meter. Engineered wood flooring revenue for this quarter degrew by 3.1% on year-on-year basis and 2.5% degrew on sequential basis and stood at 10.5 crore. For the year as a whole, revenue from the engineered wood flooring business was 36.7 crore as against 31.7 crore previous year. Capacity utilization for the quarter was 13% and for the year was 11%. Moving on to engineered doors, the revenue for this quarter was flat and grew by 6.5% on sequential basis to 6.9 crore. Revenue for the year was at 26.8 crore as compared to 24 crore previous. Capacity utilization for this quarter was 12% and for the year stood at 18%. Net debt for the quarter stood at 169 crore as against 179 crore previous quarter. Net working capital days for the Q4 stood at 74 days and for the year stood at 81 days. That's all from our side. I would now like to open the floor for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We take the first question from the line of Rajesh Kumar Ravi from HDFC Securities. Go ahead.
Yeah, hi sir. Hello. Good morning. Am I audible?
Yes, you are.
Yeah, hi sir. If I look at current year, it has been quite healthy in terms of both working capital margins, everything. Now, if I look into the numbers, what we understand, your profitability is all being driven by the laminate segment. So the non-laminate businesses, utilization remains low, or margins are.
Rajesh, you're echoing, please. You're echoing. I can't get you properly.
Hello, is this better now?
It's better now. It's better. Yes.
Yes. Sorry. Okay. So I see that the laminate business is what is driving the growth for the company, whereas the non-laminate business, be it decoratives or the other, wood and the food and flooring, wood doors and flooring, all remain, either in a lower utilization or weak profitability. So what is the outlook for various sectors? And also in terms of the capex expenditure for next 2 years, could you guide on how that will impact your leverage ratios? And on the third front, on the third question would be the large particle board capacity that you are adding in South. We also understand that there are multiple capacities which are coming up in South market in the particle board, Kerala and all nearby markets over next 1-2 years. So how do you see the competitive intensity? Yeah, thank you.
So a lot of questions, so we'll go one by one. So one is, so clearly laminates is a core business, and that is driving the growth, and this is despite the temporary, reduced production or no production last year for nearly about 25-30 days. So clearly, I think laminates right now we are stretched from a capacity utilization perspective, and we need more capacities. And in South, we are adding 3 lines of 3.5 billion sheets, which is expected to get into commercial production by Q4 of FY23. That's one.
Mm-hmm.
On the wood and line segment, yes, we clearly are aware that the growth is not up to what we expected to do. Clearly, there were challenges in the industry with COVID and restriction of production, etc. So that's one area we really want to expand and want to grow the business. It is a long-term, attractive business to be in. It is just hard to set up the sales distribution, specification, demand creation for that. So that's on the wood and light segment. Like we said, business grew last year, although it was on a small base. So capacity utilized in the wood veneer business will not be like laminates, where you can achieve 100% and all that. So I think that we just show out to say what the installed capacity is. So clearly, those are not the capacity utilization standards in the industry. So that's not really a fair comparison.
Mm-hmm.
On the capex of FY23-24, the existing manufacturing plants will just need routine capex of about 20-25 crores annually. The major capex will be the 2 new plants in Andhra Pradesh and Tamil Nadu, where until now we spent about 100 odd crores, slightly over 100 crores already, and the capex of those 2 plants will be shy of 1,000 crores, which will be spent in 23 and FY24 in 2 years. On your last question about capacities of South, etc. So we are expanding into laminates, plywood, and particle boards. As far as we are aware, there are no capacities of particle board coming up in any meaningful manner in South India. And so I think what you are referring to is mostly MDFs, where multiple players are coming into MDF capacity. So as far as particle board is concerned, that does not seem to be correct, where multiple companies or capacities are not coming up. It's ourselves and another company who's putting up a similar size capacity in the state of Gujarat. So that's where it is. If you happen to, please see our next orbit presentation. We put in the rationale of why particle boards, why are we entering that space, what value do we see, etc. So I think you can probably review that and you'll get a sense of, we've put in the whole document there on why we are entering the board, what's the stance for that. So these are our responses, Rajesh.
Yeah. Okay. Just a few follow-ups. First, on the veneer side, if I see, 2-3 years back, you had relatively healthy revenues, and this year you have seen a sharp decline in the revenue numbers. So it is all because of this COVID impact from, production. If I see, you have peaked out at 1.7 million square meters in FY19. From there, we have come down, to almost 1 million square meters in FY21 and 22. So do you see those numbers can be scaled back to 1.8 or 2 million square meters in near term? And on the particle board, how is the capex spread out? Because I understand you would be looking this capex to be completed by end of FY24. So is it all in FY24 or will it be equally spread between 23 and 24?
So if you let me go one by one. So veneers, our value production quantity growth has come down in FY22, sorry.
Correct.
About 1 million meters square. 21 we were 1,124.
Marginally, right.
And 20 we were 1.53. You're right on that. So there has been a reduction of the veneer business from a pre-COVID year, versus what's happening now.
Mm-hmm.
So clearly, I think the objective is to bring back the value of the veneer. Veneer is a more premium product, largely used in a premium residential market and hospitality industry. So clearly, we think the numbers of veneers can be brought back. We've had issues on competition intensity. We've had issues on raw material costs, availability of the base ply and the veneer. But yes, the intention will be to scale back the business. Last year, again, like we repeated ourselves, we had about 25 days of shutdown of the plant, and that plant incidentally also produces veneer. And with the COVID disturbance, so there were issues. But yes, it can be brought back to that. That's one. As far as particle board is concerned, the expenses will be spread over FY23 and 24. The exact percent, maybe Ashok can respond, because the major equipments have been finalized and we've already paid out the initial advances, etc. Particle board percent. How much percent in FY23, how much 24?
And peak debt you're looking at, sir?
Pardon?
Peak debt you're looking at?
Peak net debt, we are looking at somewhere around 750-800 crore, but that might also come by, like, let's say, towards end of FY24. In this, we are not, as of now, we are not taking into account any equity, if at all we raise kind of a thing. So this is around 750-800 crore in that range.
800 crore.
And as the particle board expense will be in 2 years, both the years will be slightly in this around 45-50% in this year and remaining in the next year.
Okay. Great, sir. I'll come back and you. Thank you.
Thank you.
Thank you. We take the next question from the line of Udit Gajiwala from Yes Securities. Please go ahead.
Yeah. Hi, sir. Thank you for taking up my question. So can you guide that how is the demand scenario and what kind of industry growth and company growth in laminates are we looking for 23-24?
So demand scenario, in our industry, as you're aware, there's still a large portion of unorganized share. So the way we are operating right now is we're clearly trying to expand our market share with the capacities we currently have. So as far as we are concerned, the previous month, this month is by and large looking okay with us, and we also have a significant international presence. So I think from that side, we are looking pretty okay with the demand side. As far as FY20, you asked FY23-24, right?
Yeah.
2 years. So FY23, which is going on, I think, because our new capacity will only come in Q4 of FY23, and considering that last year in the same period we had lost production, so I think we should be able to, grow the business in a 15 to 18% kind of a ratio this year. In FY24, we'll have 3 lines coming up. So I think next year with newer capacity, and they are of 3 different sizes. So clearly, I think our endeavor will be to bring those new capacities to a meaningful utilization at the earliest. So probably the growth percent probably would be slightly, or maybe in a similar range, because the base will go up. I think that'll also be in the band of 15-20%.
Understood. And sir, just a clarification, like the realization as compared to our peers, like we are far ahead in terms of realization. So do we see any kind of losing market share because of this? Because we might have a limited capacity for this year, so there might be incremental demand which may go to the peers or kind of a thing.
So our realization being higher is a function of the product mix, constant working towards value addition and premiumizing the brand in both domestic and international business. And we are already end of May. So it's a matter of few months, or maybe 8 months or 7-8 months types till we get new capacity. So I don't think that's a huge matter of concern. In laminates, it just takes time to go and build sales and revenue. It is not a commodity that you can just go and put into everybody. So I don't think that's a matter of concern.
And sir, lastly, on any guidance or any point you would like to put on the laminates margin front going ahead, because we are seeing constant pressure on that front since few quarters. We are taking price hikes, but
Yeah, so unfortunately, each time we take a price hike, and like in Q3, we were hoping that further RM costs won't go up, and by that time we had passed on most of the RM cost increase, which does not mean necessarily that margins can be maintained, because we are only passing on the RM cost increase. So the value of margin gets maintained, but the percentage does come down. So Q4 increases again has been passed on to the market, which probably will be visible in this quarter's per sheet realization, etc. If RM costs don't go up any further, and we have no disruption at the plants for COVID or any other matter, so clearly margins should improve in both percentage and value.
Got it, sir. I'll come back in the case. Thank you so much.
Sure.
Thank you. We take the next question from the line of Sneha Talreja from Edelweiss Securities. Please go ahead.
Hi, thanks a lot for the opportunity, sir. Just 2 questions from my end. Firstly, with regard to demand.
Sneha, this is the operator here. Your audio is not clear.
Sure, I'll just take it on the... Is it better now?
Much better, yes. That's right.
Yeah, thanks, and sorry for the delay. Just 2 questions from my end. One, so in the first part of it, just to answer somebody, you mentioned that demand is good. My question was more relating to Q4 volumes. Although I understand there were container availability issues, and because of which your exports growth was impacted, what I see is your domestic volume, both in the laminates business, veneer business, and even other parts of the business has not grown. We look at it as a YOY decline. Could you specify the reasons why we have seen fall in terms of volumes even in the domestic market?
Yeah, so we lost production at the Behror plant, right, of about 10 days of production, which is nearly 250,000 sheets, right? So which is nearly about 25 crores of value. So I think loss of production was there. What we produced, we could not, ship out completely because of containers availability, etc. We've also improved the value mix, and that's why you also see a significant realization improvement in domestic. You see Y and Y, domestic realization has gone up by about 27.6%. So our per sheet value is 952. If you look at the overall realization between Q4 21 and 22 in laminates, the price realization improvement is about 30%, which is a function of price increases, value mix improvement also, right? So I think it's a factor of loss of production, change in the value mix, improvement of realization, and inability to convert production or inventory to sales because of containers availability in exports.
Right. So given that we have been able to pass on the raw material costs, so fair to assume that inflation or the competition has not been able to take similar kind of price increase, because of which maybe they've got the volumes, but margins for us is better off. Is that safe to assume?
No, we haven't lost volumes. I think probably maybe I'm not able to explain the understanding properly, because we've lost production. We couldn't produce. The factory was on a 5 days working model for all of Jan and partly February. So we haven't lost volumes or lost market share. And then we couldn't invoice because we had higher finished goods inventory lying at the factory end of March and at the port, which could not be booked as sales because vessels did not come in. So we've not lost market share or volumes. We've moved the value mix. There has been production of more premium items to negate cost increase, etc., which anyway is a constant effort we always take. So that's resulted in the value mix improvement also. And anyway, the plants ran full capacity for the days they were supposed to run. We could have produced more.
Got that. Could you also quantify, I think you mentioned the volume, so the lost volume, 25 crores is the absolute amount that we lost. In terms of laminates volumes, what would be that amount that we lost because of the plant?
So loss of production about 250,000 sheets loss of production was there.
And if you see in terms of production and dispatch volume or sales volume, the number is close to around 1.5 lakh sheets. So those are the things which could have been built or converted into sales, but because of challenges, logistics challenges, these were delayed.
Understood, sir. So that actually means that since these plant issues are sorted, we'll be able to see at least volume run rate coming back from Q1 itself.
Yeah, surely. It's already, it was sorted in February only. So, yes, the answer is yes.
Sure. And just to get a perspective from the raw material front, you mentioned that, of course, you took the price hike in Q3, and based on that, you were confident that, there will be no further price increase, but there was, and eventually we failed in the margin. How is the scenario right now? Are we seeing some stability in terms of prices? Is everything passed on, or are you seeing constant price increases even now?
So we were not confident the RM costs wouldn't go up. We were hoping it wouldn't go up, right? And it did, and some RM costs went up. So as we talk right now,
in this also, there are again, it's moving up and down here and there. Some weeks it is down and some weeks it's up. And as of now, there are stability in most of the raw material, except that one raw material, phenol. This is again because of crude has again touched 120. And then the benzene has gone up. So we are constantly reviewing the entire scenario, but on the other side, there is some downwards in some other raw material, especially in paper and other things. So we are constantly keeping a watch on this. What sir has said that as on Q4, whatever was the increase in the increase which we have passed on and which was effective from onwards. But we are keeping a close watch on this. As of now, nobody with a certainty can say that whether price will go up or down. We are keeping a watch on this, and we'll take action if at all anything is required.
Sure. Understood. So that was helpful. And last one, if at all, you can give some update on the particle board unit and plywood unit 2. We understand laminates is coming by Q4 FY23. Just wanted to understand about the particle board and plywood unit 2.
So the timelines are the same as we mentioned earlier. So plywoods in Q4 FY23 and particle boards by Q4 FY24. The major equipments, like I said earlier, for all the three businesses have been finalized and placed orders with balancing equipment, some other thing. Those discussions with technical discussions and commercial discussions are going on. Civil construction of laminates and plywood has commenced. So there we are.
Understood, sir. Thanks a lot, sir. And all the
Thank you.
best.
Thank you. We take the next question from the line of Ronak Vora from AUM Advisors. Please go ahead. As the line is on hold, we take the next question from the line of Nikhil Agarwal from VT Capital. Please go ahead.
Yeah. Good afternoon, sir, and thank you for the opportunity. So I wanted to understand, like one of your competitors is venturing into acrylic solid surfaces, and they say that it is kind of a replacement for laminates, like a good quality. It is a superior product compared to laminate. So what is your take on this, and are you also considering to step into this?
So acrylics, solid surface and laminates are two different products, and the usage of both the products are not necessarily, in our view, replaceable. So saying one is better and one is worse off, I don't think it's the right comparison. As far as we are concerned, that's not an area we are currently, looking at in acrylic solid surface. Yeah.
Okay, sir.
We want to stick to our wood panel segment and to adjacent spaces. That's not something we are looking at right now.
Okay, sir, perfect. And so, what the growth guidance, the revenue guidance that you gave for FY23, if you could just repeat that one.
Right. No, so we said that considering the capacity, challenges we had last year, if things go, well this year with no major distance, we should be able to grow the business about 15-18%.
15 to 18%. Okay. And so, what were the price hikes you had taken in Q4 and in FY22?
So in the Q4 we will take the price hike is implemented from April onward in the Q1. So this is we have taken around 3% in domestic market and around 5% in export market.
Okay. And in FY22?
FY22 as a whole, we have taken around 10% price hike in both
the markets.
Yeah, both the
markets.
Domestic and
okay. Oh, okay. Thank you so much. That's it from me.
Thank you.
Thank you. We take the next question from the line of Ronald from Sharekhan. Please go ahead.
Yeah. Good afternoon, sir. I had query regarding the passage of raw material prices. I suppose there would be, I think, 1 to 3 months lag in those passing of costs. So is it true that is it 1 month or 3 months price lag if you pass on the raw material prices?
So I think both are true. For domestic, it's like 1 to 2 months. For exports, international market, at times it takes up to 3 months also.
Okay. And I
already have orders in the system. We just takes time to, so by the time we communicate price increases, we conclude that we already have backlog, at the plant of orders and, in the system actually. Yes.
Correct. And I suppose there was some kind of, easing of container availability during Q4, but you said that there were issues. Can you detail out something, and whether the export markets they factor in the freight rates, or we have to bear the freight rate?
No, so when we say containers issues, because we ship to many destinations, so sometimes for certain routes, certain destinations, they might have been easing out, but for certain destinations, we still have availability issues of boxes and vessels. As far as the freight rates are concerned, although our contracts are CIF, but since Jan 21, incremental freight costs have been passed on to the market, to our customers. So actually, if you add that to the price rise, the price increases are far higher. So this is the way we operate.
And when you say 15 to 18% business growth, means you would mean a higher realization driven by value mix and price increase? Because I think capacity-wise, we are well utilized during FY22.
So this will be mix of, we lost some production days last year. While we mix of volume, price improvements, and value mix improvements.
Okay. Okay. And if you can break out this CapEx, you said that you spent 100 crores till date, right, on CapEx?
Yes.
On the new projects, on the two new projects of Andhra Pradesh and Tamil Nadu.
Right. So on this 1,000 crores CapEx, how you'll be doing, like 80% would be debt, or what kind of debt equity you are planning? And are you, planning to raise some equity from the market?
Yeah. So debt equity we have planned is 65-35. 65% debt and 35% from internal accrual. Even though we have taken enabling resolution for fundraise, but for these two projects, we don't, this is internal accrual will be enough. We already spent 100 crore from our internal accrual. We have some cash on the books and 250 crore, which we need to fund in next 2 years. So we believe that is enough for this project. For as regards a fundraise, we are reviewing this entire scenario and we'll take a call at an appropriate time.
Okay, great, sir. And last one was that this container issues got resolved in February onwards, right? Or is it still, logistics issues you are facing?
Oh, no, there are still issues, and since we ship to so many countries, like I was saying earlier, at times certain destinations are fine, certain are not okay. So it's still not, what it was pre-COVID, and yes, so we still have availability challenges, vessels moving on time challenges, so that still persists.
Okay. Thank you very much, sir. Thank you.
Thank you.
Thank you. We take the next question from the line of Rajesh Kumar Ravi from HDFC Securities. Please go ahead. Mr. Rajesh Kumar Ravi, your line is unmuted. Request you to please go ahead with your question. As there is no response, we take the next question from the line of Mohit Agarwal from IIFL. Please go ahead, sir.
Yeah, so thanks for the opportunity. So a couple of clarifications. So, in your laminate business, you're already running at more than 100% capacity utilization, about 106%. So how much capacity utilization can you target? What is the maximum limit? Can you go up to 110, 120%?
So we can, in the past, we've gone up to like 115, 118% types, in individual factories. So we can go up to, let's say, 115% types.
And would you be outsourcing the production, or will it be purely all the production will be through your own factories only?
So we don't outsource. All our production is in-house, and I think that's the route we'll follow.
Okay. And on the margins, you've mentioned that you've been able to pass on the input cost, inflation till fourth quarter. So assuming no more further increases in input cost, should the margins revert back to 13-15% range in FY23?
So we said this earlier. So once, since we lost value of production last year, so with improved volume, price increases being effected in the market, value mix improvement, strategy which we have adopted and towards premiumizing the brand, so margins should improve.
Okay. And the last one, you've mentioned that your capex, is on. There's no change in the timelines, but any change in the capex number, like because of the entire input cost inflation, has the capex number changed, or does that also remain the same?
So there could be certain capex numbers related to civil construction, which could change. Although we had kept contingency in the announcements we've done, so that's something we're keeping a watch on. As far as the machinery, etc., is concerned, we don't expect much changes there.
Okay. Thanks a lot. That's all from my side.
Thank you. We have Mr. Kumar Ravi from HDFC Securities connected back. So you may go ahead.
Yeah, hi sir. Sorry, my voice was not clear. So, two questions. First, in terms of the plywood business, what sort of revenue traction you're looking in the first year of operations, FY24, and by when you expect this to ramp up closer to your full utilization?
Yeah, in the first year of operation, we have taken around 50% utilization, so close to around 200 odd crore, 175 to 200 odd crore we have projected, and we have taken the full utilization or the 100% level in the third year of operation.
Okay. And is it like high operating leverage business, and hence only when you achieve, to deliver a 20% sort of plus EBITDA margin, what sort of utilization would be required, sir?
Where did you get the 20% figure from? So supply is not going to be a 20% operating margin business. Supply, I think we discussed this in the call. I think it was more like a 15% kind of an operating margin, 13-14% kind of a operating margin in the business, not 20%.
Okay, and what utilization would bring you close to that, sir?
For sure, 100% will bring us to that, because it's also a function of, branding, distribution, etc. Because we have to get the product out in the market, get the physical distribution in place to bring the right price points. So it's not only a function of capacity utilization.
Correct.
It's also about strengthening the branding, marketing, distribution, pricing.
So it would be, after 2 to 3 years, you would be looking close to those sort of numbers.
Yes, that's right. That's
yeah.
right.
And in terms of cost of debt, what would be your borrowing costs, sir, for the debt you're planning to raise?
Yeah, Rajesh, in this it will be a mix of ECA, which is since the equipment for particle board will be coming from Europe. So there is a long-term borrowing which is available, which comes at a very competitive cost, and remaining will be from the domestic. So for the external borrowing, that in this scenario it's difficult to comment because the interest rates are going up, but we expect that within around 2-3% for the external borrowing, and for the domestic will all depend upon what the rate at that moment of time. But as of now, it's in the range of around 7.5.
Okay, and sir, this 2 to 3% would be what portion of your loan at 2-3% rate?
It will be around one third.
Okay, super. Great, sir. Thank you. I'll come back in queue.
Yeah. Thank you.
Thank you. We take the next question from the line of Ronil Dalal from Museum Capital. Please go ahead.
Yeah, hi, good afternoon. So I had a few questions around your plywood business. So firstly, you had mentioned there was 100 crore capex in Andhra Pradesh and Tamil Nadu. So what portion of that would be dedicated towards the Tamil Nadu or the ply business?
So this 100 crore is not the capex. Total capex is around 950,000 crore, and 100 crore is the capex which we have already spent till March. So out of this 950 crore which we have announced, is around 125 crore in the plywood and 225 crore in the third laminate plant, and around 600 crore in particle board.
Right, but I think you had mentioned some civil construction and all has started. So far, what would be incurred capex in Tamil Nadu?
Tamil Nadu, this is started in this month only. Construction is started in this month only. So not much of the expenditure has been done in Tamil Nadu as of now. So this is starting now in this month. So now from this month onward, this is started.
Right, right. Because I was actually checking your subsidiary balance sheets, and the current work in progress is not yet moved. So that's why I wanted to just check.
By the March, there won't be much.
Right, right. Okay. So my next question is that that in Tamil Nadu you all have had operations before your acquisition. So what would be, say, the existing plant and machinery which is there at within Tamil Nadu state? Or maybe what revenue would be coming from that?
No, this is a new plant. There is no plant and machinery is there in the Tamil Nadu.
Okay, so it was just a land and there was no plant and machinery.
Only the land was there.
As far as the revenue is concerned, ply on a full capacity will be more like a 400 crore revenue per annum.
Right, right. So there was nothing in any other business also. There was no plant and machinery or anything else was at the location of Tamil Nadu.
No, that was used as a warehousing facility. So
okay, right. It was used as a warehousing facility. Okay.
Yeah, there was some.
That will continue to. Okay, so that will continue to serve for the warehousing as well as your new capex, right?
No. We have moved the warehousing out of that location because we are going to build a plant and there's not enough space to do both the things. So warehousing is moved, close to that plant, about 30-40 kilometers away, and this site will be used fully as a plywood manufacturing unit.
Right, right. So final question is that it's means for GREENLAM, only 75% of that business is owned. So why not 100%?
This is a listed company in terms of that only. So 75% of the shareholding only was there with the promoter, which has been bought by the GREENLAM. Remaining is there with the general public.
Right, right. So this particular site had some advantage, or maybe you all were already familiar with it. That's why it made sense to buy this.
That's correct. Yes, because land was ready and the approvals were in place, and we put this out on the next orbit presentation on why we've chosen the site in terms of raw materials, market, etc.
Right, right. So now the capex which comes up will show in GREENLAM books, or of course it will show in the consolidated balance sheet, but or will it also show? Will it then reflect in the subsidiary as well?
It will reflect in subsidiary because subsidiary is going to spend all the money, so it will be in the books of subsidiary. On Concall basis, yes, it will be a part of GREENLAM.
Okay, sure, sir. Thank you so much for answering my question.
Thank you.
Thank you. We take the next question from the line of Nikhil Agarwal from VT Capital. Please go ahead.
Yeah, yes, thank you for the follow-up. So this was on the raw materials front. Like your main raw materials are on the chemical side are melamine and phenol, I think, and they've been on a downtrend. But what is the trajectory of the paper right now? The kraft paper that you purchase, what is the price trajectory? What has been the price trajectory for that?
First of all, the chemical, there are three chemicals, phenol and melamine, you said correctly. There is one more, methanol. So that the price of phenol is not softened, rather it is firmed up. Melamine price, you are correct, melamine and methanol price has corrected from what it was there in the sea, but the price of phenol is not reduced or not, rather it has firmed up post this Russia war, Ukraine war. This is firmed up from what it was there previously. And in terms of paper, we use different type of paper. For the domestic paper, kraft paper which we use, the prices has come down by around 10-12% from what it is there in the peak.
From what it is there in the?
At the peak, yeah. So like you correctly said, so one part of the domestic paper price will come down. But at the same time, the other part of paper, which typically uses wood pulp and 100% virgin grade, the 100% virgin grade kraft paper, their costs have firmed up. So net, there's a minor reduction overall.
Okay. And your chemical costs account for about 35% of the cost of production, right?
35% of the RM cost.
Yeah.
Okay. So do we see okay, I mean, I understand that phenol prices have gone up and even your kraft paper prices have remained stable. But do we see the realizations going down or after the price hike you have taken for the full year, do we see the realizations being at this level or is there any chance of going down as well?
So we haven't reduced any prices, and realization is a function of pricing and the product mix and value mix.
Yes, absolutely.
We see, I don't see it coming down, at the moment. So the endeavor is to constantly keep improving the value mix and the product mix, and we have issues, and we are working in a certain direction, on that front.
Okay, I get it. That's it from me. Thank you so much, sir.
Thank you.
Thank you. We take the last question from the line of Vipin Taneja, an individual investor. Please go ahead.
Hi, sir. Good afternoon. I just wanted to understand what is exactly driving the growth in laminates. Is it the pent-up demand due to COVID, which was, subdued earlier? And second is, how are we placed with the competitors like Merino and Century? Please, if you can explain that. Thank you, sir.
So as far as the demand of laminate is concerned, I think it's general growth in both domestic and export market. In domestic, we believe since there was significant supply chain disruption in our industries, we believe a lot of unorganized companies have curtailed their production, and they've had challenges with availability of raw material, capital, etc. So I think we've ended up taking some market share in the domestic space. As far as the export market is concerned, we've been constantly expanding that space, and we are restricted in terms of capacity there. So clearly, I think it's a function of market situation, our working in the market, products, distribution, reach, etc., etc. As far as competition is concerned, so in laminates, clearly our closest competitor is Merino, and yeah. So you want to.
And sir, how are they doing? Because I was checking their distribution channel, and they are targeting mainly architects, and that's why they are having a bit of a higher margin, and they are the leaders. So any in terms of new strategies in terms of our marketing and sales, which we have for the current year, sir?
So as far as numbers concerned, in terms of revenue, we don't have the FY22 results. But if you look at the last few years' revenues, we do more than them laminates on laminates. In domestic market, they do slightly more than us. Exports, we do more than them. So that's on the revenues between us and Merino. How are they doing? I think they're doing fairly good also. I don't have access to their numbers because they haven't come to the public domain. So this is where it is. As far as the targeting of architects, IDs are concerned, I think that's normal course of business. Architects, IDs, contractors, OEMs, they play a large part in terms of influencing and specifying the product. So I think it's a routine effort of working with the influencers to create demand, working with contractors and carpenters, and with the channel to create the physical network. We also work with e-com furniture players, so there's a lot of marketing activity and sales activity which we do.
At the margins, sir, why are they having a higher margin compared to the industry standards?
So I haven't seen the numbers of FY22, so can't comment much on that. As far as the previous year's numbers are there in the public domain, I think maybe that can be a separate dialogue, and we can discuss that. Maybe you can have a chat with Ashok offline, and we can see, do they really have higher margins, and what is the ROCs we have, what is the ROCs they have. So at the end, we have to see what is the denominator, and which stage of business are we in versus them. So I think that's a dialogue maybe you can have with Ashok. As far as Ashok, just pull the sheet. 1 second.
Yeah. So in the FY21 overall margin, if you see, they were at around 16.2% margin. We were at around 14.4% margin, and there are reasons for this difference. Yeah. There are reasons for this difference in terms of our marketing spend is higher than them, and employee costs are higher than them because are more of a professional setup. Vis-a-vis a lot of family members work in them.
And if you look at the ROCs, I don't know, so maybe you can have a separate dialogue with that, but probably very similar. Yeah.
And sir, just on the laminate as an industry, is it just that the laminates per house or laminates, per unit house, is that increasing significantly versus, the previous trend because of the aesthetic looks which it provides to the house? Is that the change which we are seeing post-COVID, sir?
I don't think that's changed post-COVID, but clearly, laminates is a preferred material, increasingly preferred material in the decorative paneling space, in kitchens, wardrobes, door shutters, with the lot of choices customers have, and at the price point, and with the ease of maintenance, to keep the laminate. So we believe market share of laminates will gradually keep increasing. Also, then there is laminates which is being used inside the furniture, right? Which is called liners, commodity products, in kitchens and wardrobes, and so I think that's also going on. But post-COVID, tough to say that post-COVID laminate usage has increased. I can't put that together.
Okay, but you're not seeing that is because of aesthetic looks and people are more conscious about how their house looks now versus earlier trend 2 years back.
Well, yes, obviously, if people are staying more at home, then they want to do better interiors, but I'm sure people have started moving out. So really, I think that's more of a momentary thing. But yes, clearly as a material, at the price point, with the amount of choices the customers have in terms of colors, textures, wood grain, stone patterns, it's quite a useful material at that price point, for the consumers, for them to use this product.
Right.
It's easy to apply, and there's no maintenance to be done literally.
Okay. Sir, one last question, although you mentioned to see it in the report, the future of plyboard, sir, just wanted to hear from you, sir. Just a couple of points would be enough, sir.
The future of plywood, is it?
Plyboard, because you're expanding in there.
Yes, correct. Yes. I would, probably you're well informed, and it's about a 30,000 crore market, and we put that in the presentation of why we're getting plywood. And we're just two branded players across the country. So again, same story, unorganized to organized movement. It's an essential product, and we have products for the residential market, for carpenters, contractors, homeowners, in the form of veneers, flooring, and premium laminates. And we believe this space, and there's a possibility of a third player, to be stepped in, because there is no meaningful third player in the market. So there are players, regional players, and certain other national players, but most of them are subscale, and they don't have much focus in marketing, sales, or they don't have the right manufacturing, capacities and the capabilities. So really, we think it'll be a profitable business from a perspective of margins and ROCs, etc. And it's also adjacent to what we do. Most of the channel partners, architects, IDs, influencers, people are pretty common. So there's leverage and synergy.
Expenditure won't be much there, like sales and marketing.
So marketing expenditure will be there, because it'll be plywood. But clearly, the style of marketing, product development is a bit different from what we do currently, in the sense that there's not numerous ranges and launches and displays and all that.
Okay, but the sales channels will be the same, or the different profile?
So there will be overlap. There clearly will be overlap. In laminates, the model is company, distributor, and then to number of dealers. In plywood, is more complete than direct dealer formats.
I was talking about plyboard, right now, sir? Yes.
Yeah, I'm saying about plywood. So in laminates, it's more company, distributor, dealer. In plywoods, it's more company, dealers.
And sir, in plyboard, what would be the our margins which we are looking at, sir, EBITDA margins?
So we'll be in the range of, like we said, on a full capacity, like 13, 15%. Yes.
Right. And sir, in that particle board also we are targeting, sir? Any
As in?
particle board? Particle board?
Yes.
Yeah, we've already announced that particle board we are putting up a plant in south, and we'll be spending close to around 600 crore on that.
And sir, in particle boards, would we be directly tying up with OEMs, because a lot of new furnitures which I was reading is maybe it is Durin or Nilkamal has also opened a branch, so they are primarily coming up with that particle board furniture these days. So will we be going directly to the OEMs as well for particle boards?
So larger OEMs, will be served directly, and like you mentioned, Nilkamal or some other larger players, but there will also be. As you probably are so well informed, there are many smaller OEMs doing, fabrication, kitchens, home improvement, wardrobes, students' furniture. So there'll also be an element of distribution happening to the smaller OEMs, to the stockists and dealers or big distributors.
And margins which we are looking at, sir, here in this particle board?
In the range of around 25%.
Achha, 25%. Okay.
It's because the capex to sales revenue ratio is around 1:1. So that's how the margin.
Okay. Actually, that was my next query, but you have already answered. But thank you so much, sir, and all the best, because you are coming out with a huge capex. It is not easy. And thanks a lot, sir. Good luck to you and the company, sir. Yeah. Thank you so much.
Thank you so much.
Yeah.
Thank you. We take the next question from the line of Janish Keria from Antique Stock Broking Limited. Please go ahead.
Yeah, thank you for the opportunity, sir. Am I audible? Yes. Hello. Yeah.
Go ahead.
So I understand that in a volatile environment regarding costs, it's difficult to comment on the margins. But if you can give us any flavor about the EBITDA per sheet or something like that, whether it will stay at these levels or it will taper down, or because of the value mix, it will increase, or some flavor on that part, sir.
So, in terms of EBITDA per sheet, this quarter it was at around 137 rupees per sheet, and last quarter also it was at similar level. It was 136 rupees per sheet.
So going forward also we plan to maintain that or?
So as we have discussed in the call, that price hike what was there in the Q4, we have taken that price hike and which is implemented from April. There was some disruption on the production side, which was also get resolved. So if there is no other disruption which we don't know as of now, then probably the margin should improve. And in case that improves, so then obviously that will have a positive impact on the EBITDA per sheet.
Okay, got it, sir. Thank you. That's all from my side, and all the best.
Thank you.
Thank you. We take the next question from the line of Abhishek Vora from Ambit Asset Management. Please go ahead.
Hi, thanks for the opportunity. Quickly, just the clarification on the numbers of domestic exports volume and value numbers, if you can please repeat on that.
Yeah, Abhishek, we will stop this. We'll come back to you.
Sure. You had mentioned the numbers in the start of the commentary. I think exports volume declined by 19%. Is that number correct?
Just a minute.
Sure.
Yeah.
And domestic volume decline would be?
4.5%.
Sure. And the volume growth in domestic would be? Sorry, value growth in domestic would be?
Value growth in domestic was 22%.
Sure. And the exports value growth was 4%. Is that correct?
So 15.3 was domestic and 23 in laminate you are talking?
Yes, sir.
23.9 in the domestic and 8.9 in the export segment value growth, sir.
Sure. 23.9 and 8.9 are the domestic and exports value growth respectively on a YOY basis, right?
Right.
Yeah.
Quickly also, if you can please give a sequential growth number of domestic and exports, it will be helpful.
It was around 4% in both the
4% each, right? Great. Thanks a lot, Ashok, and all the best.
Thank you. We take the next question from the line of Rajesh Kumar Ravi from HDFC Securities. Please go ahead.
Yeah, hi, sir. Just wanted to understand again on the leverage side. You said that you would be comfortable with the current internal accruals to fund these capex and the borrowing in terms of your leverage ratios.
Yeah.
Okay, because if I look at your net debt numbers, which you said it would be close to 800 crore, right?
750 to 800 crores. Yes.
800 crores. And then, your EBITDA would be close to 2,500 odd crore or less than 300 crore sort of a number. So are we not looking debt to EBITDA ratio of almost 3x or more than 3x type of a number? And given that if there is some volatility and ramp up delays, that would have a bearing on your overall performance. Well, what is your thought on?
First of all, yeah, this debt which you are talking, this will be towards the end of FY24. This debt will be towards the end of FY24, and net debt, as I said, that 750 to 800 crore is there, and if we divide that 300, then it will be well below the 3. And as you know that we have already taken the approval for the QIP. As of now, that is not yet finalized, so we are reviewing the situation.
Great.
So we still have in terms of that.
Understood. So, if at all you go for that, that will have a strengthening factor for you.
Absolutely.
Yeah. Thanks, sir. That's all from my end.